It's February 8th, 2014. I'm over at ETF Daily News. There's an article written by Michael Lombardi. He says, Michael, you don't know what you're talking about. And that's pretty much what I was told back in 2005 and 2006 when I was warning extensively that the U.S. housing market would collapse. When a boom in any form of investment is going on and millions of people are participating in that boom, it's hard to convince people the boom is about to bust. At a certain point, we start hearing that old saying, it's different this time, which means people simply don't believe the boom will end. They try to legitimize it. But like all booms, the bust did happen. The housing market went bust big time. We all know what happened after that. Today, there's another asset class that's booming. That's investors large and small are literally running to. No, I'm not talking about the stock market. It's already in bust mode. I'm talking about the greenback, the good old US dollar. In recent days, and despite trillions of dollars in new money created by the Federal Reserve, the US dollar has gained traction as investors search for safety amid the collapsing emerging markets. Personally, I think investors are wrong to find security in the US dollar. In fact, I see its days as the leading currency of the world being numbered. But the fundamentals that make the dollar a safe haven are damaged. Aside from the fact the Federal Reserve has printed trillions in new money and the government continues to take on never-to-be-repaid debt daily, central banks around the world are reducing the amount of reserves they keep in US dollars. Please look at this chart. Take a long look at it. This is not just Lombardi speaking. We've been hearing this from other financial gurus, trends experts like Gerald Celente. Take a look at the chart. Look how it's going down, down. In the chart above, I've plotted the US dollar as a component of the total foreign exchange reserves at the central banks around the world from the first quarter of 2000 to the third quarter of 2013. The chart clearly shows central banks have been reducing the amount of US dollars they hold. In the first quarter of 2000, total foreign exchange reserves in US dollars were 55%. In the third quarter, they accounted for only 33%. That's a huge drop in 13 years. This isn't the only phenomenon that gives me cause for concern over the US dollar. Momentum is growing for further distancing of central banks from the US dollar. One example of this, former chief economist of the World Bank, Justin Yefilin, told a Brussels-based think tank, Bruegel, that the dominance of the greenback is the root cause of global financial and economic crisis. The solution to this is to replace the national currency with global currency. The source for that was Replace Dollar with Super Currency, Economist China Daily, January 29, 2014. Another example of taking the focus off the US dollar is the rise of virtual currencies like Bitcoin. It may never become mainstream currency, but it's certainly interesting to see a rush towards it. Adding to the concern of the US dollar, the US government continues on its reckless spending ways. Recently, Congress and the House passed a bill that essentially raises the national debt limit another $1.1 trillion. Basic economics tell us the higher the national debt goes, the weaker the US dollar becomes. Now, Lombardi gives a note to readers. Dear reader, I don't mean to scare you in any manner, but the fragile state of the US dollar is something you need to be aware of. As the US dollar loses its reserve currency status, which is a process that will take some time, your money will buy even less. In other words, a return to inflation is in the cards for the US economy, according to this economist. Again, we've been hearing this from multiple sources. They're warning us, they're letting us know the dollar is going to collapse. It's also no longer going to be the global currency. When that happens, well, there's an expression for that. I believe the term is SHTF. Have a good day.